Morning traders, it's the 12th of May. We are Signal Centre Talking Bull. I'm Joe, joined by Steve. We've made it to the end of another week. How you doing, Steve?
Yeah, pretty good, mate. Yeah. A lot happier after yesterday's gun to head trade idea, I must admit. I was like struggling all week and at last got one.
Yep, nailed it. Well done. We'll get onto that shortly. But prior to that, let's go through the latest headlines because there's been a fair amount in the market over the past 24 hours. A bit of fragility starting to show in certain markets. And let's try and dig into the reasons behind it. So yesterday we had the Bank of England hike rates by 25 basis points. That was pretty much expected. The vote was 7-2 in favour of the move. Only a couple of dissenters in there. The bank raised its growth forecast with a substantial impact from a sharp decline in gas prices. The bank now expects positive growth in 2023 and 2024 with no quarters of negative growth. Overall, forecasts were revised higher by the largest extent since the bank gained independence in 1997. The bank also raised inflation forecasts with the important impact from strong increases in food prices. The messaging from Andrew Bailey, the governor, refused to give any significant guidance and insisted that the next policy move would be data dependent. Bailey's later comments were then more dovish, with reported comments that the bank is approaching the point where it should be able to pause rate hikes. So, yeah, some very mixed messaging there. Yesterday, we had US PPI inflation and we saw that ease. The producer prices increased 0.2% for April compared with the consensus forecast of 0.3%, with the year-on-year rate retreating to 2.3% from 2.7%. And this was marginally below expectations of 2.4%. The jobless claims that came out yesterday increased to 264,000 in the latest week from 242,000 the previous week, above consensus forecast of 245,000. We've seen a slide in Chinese loan growth. The latest data from China reported an increase in new loans for April, which was ahead of the previous month and substantially below the consensus forecast. The data triggered fresh reservations over Chinese growth outlook. This morning, we had the UK GDP data that recorded 0.3% decline for March compared with expectations of no change. There was, however, a marginal 0.1% increase for the first quarter, which was in line with expectations. So yesterday we saw some pretty fragile price action across the board with reservations over global growth and also the US debt ceiling issue, which remains unresolved. There are also fresh reservations over the US banking sector. The dollar managed to secure some defensive support. We'll see the charts for that shortly. And that really put the commodities and the commodity currencies under a bit of pressure. The US markets were lower, but did recover from their intraday lows. Again, we'll get to those charts shortly. But Steve's going to kick us off with a look at cryptocurrencies. If anybody else has got any other requests of markets that we don't cover, please feel free to post them up. We've had some requests already for sterling yen and euro yen, which I will get to very shortly.
Thanks, Joe. I'm going to dive into Bitcoin first. I'm just interested with them GDP figures. I'm going to have a little look at those while Joe talks about FX, but just to see what the UK has done. And I don't know where the growth's going to come from. Definitely not from my household, but we'll see how good Andrew Bailey is at his job. Not very. A lot of people are shouting. Anyway, head and shoulders formation has actually, we've broken down through the neckline and confirmed the head and shoulders formation. Now, these are one of my favorite formations and one of the most successful formations when it comes to technical analysis, according to Markowitz, is it, Joe? I can't remember what the guy's name is, but he studies all of the technical patterns and as over years and years and years, and comes up with data on that, suggesting the head and shoulders formations are one of the top 5 indicators for us. So nice break here. For me, it sort of like makes sense. Bitcoin breaking down. It obviously sort of like came back into fashion after hitting a low around about the 15,500 level. We've had that projection back higher. It's failed to break through that resistance level that we formed. Let's take a look at the weekly chart. It's clearer on here. This is the previous support level, which is a solid support level, and prices reacted from here multiple times. and it struggled to break through there. It formed this inverse head and shoulders formation. Still got half a chance with this because we broke through the neckline at 25,500. That is a next support level for us, the major one. And normally head and shoulders formations or inverse head and shoulders formations, when they break through the neckline, they come back, retest the neckline, and then project higher. So there's still a bit of a battle going on. It didn't quite get to the projected move target. Got halfway though. The projected move for this formation was 35,000, got to 31,000. So yeah, 50%, reached 50% of that projected move target. Still classed as unsuccessful, I suppose, if you're going to be picky about it, but still had a major move. We've got this 4-hour chart, which has a bit of a clear indication of where we are on a short-term basis. We're broken down through the cloud, broken down through this upward trending support line. That was the neckline of that head and shoulders formation, and we projected nicely lower. Got down to 26,100. So remember, the real support anywhere between 25,250 and 25,500 on Bitcoin. Ethereum's followed suit. Let's take a look at the daily chart again. We've got a downward sloping head and shoulders here, and that has broken through and looks at the moment, if it was to close right now on a daily basis, that would confirm that. Still got a little bit of time to recover, but overall that's straight into this area of previous resistance. Now should turn into a bit of support all the way down to 1700. Remember, 1730 is the pivotal level. We've been down to 1740 this morning, looking to retest that quite pivotal level that area we have around the 1700, 1730. XRP's held up pretty nicely overall compared to the others. We've tested that 41-cent level, just trading above there, 42.80, although we've rejected a move to 44.30. And again, you can see the sort of we can draw a head and shoulders on here as well, up to here, left shoulder. Not a great one. In fact, pretty awful one really, but you can see the sort of like the similar sort of characteristics that there is. We did mention that if we take this candle from the 29th of March and this candle from the 14th of April, there is potential for a double top formation with the neckline coming in at the low point between those two highs at 48.24. So that's played out pretty nicely, and it did the same. It broke through the neckline, retested that neckline at 48.24. So for us, major resistance now, 48.24 in XRP. The support, as we say, around 41, and then the major one at 35.5. Taking a look at gold. Interesting couple of days in gold. We had the sell-off from last Friday's non-farm payroll down to 2,000. The reaction higher got all the way up to 2,000, just short of 2,050, and then we've had the sell-off from there. We've got upward trending support coming in at 1990. That's definitely a level to watch. And below there, we've got multiple support areas all the way down to 1935. So gold still looking overall positive, although we're having this ABC correction, or this multiple lower high pullback, really sort of targeting a move towards that 1980 and retesting that once we sort of like get over the hurdle of the 2000, which is a psychological level, and that swing low. Crude oil, again, since Wednesday, oil inventories Wednesday, we've had negative price action yesterday, and overnight we've seen lower prices breaking down. Let's clean this chart up a little bit. Let's look at the short-term chart, try and get a bit of a gauge on here. We have been in this downtrend really since sort of mid-April, where prices rallied back up towards that 83.27 and have ground lower since then. We did break up through the Ichimoku cloud on a four-hour basis on Tuesday, and now breaking back down below it, so giving up those gains. Still You could say this is a minor recovery, so there is still a little bit of potential for the upside, but under a bit of pressure now, going through a bit of a sort of vacuum areas in terms of where volume has been previously between that $70 level and probably around about the 69.30 level. So really not much price action between there. You can see that prices tend to sort of like gap between there and the 69.30. So under pressure. Brent crude oil, similar sort of price action under the Ichimoku cloud on the 1 hour chart. Obviously, short-term trend is down. Multiple highs here. So we have sort of like created that like a double or treble top formation. This is the major double top here. We can project lower and see where the measured move target for that would be. Around about the 72.66 level, straight into this area of support, which stretches all the way down to 71.5. So yeah, crucially, $75 in the Brent crude oil would be resistance. Resistance above there, all the way up to 75.65, but $75 is the main one for me. That's the swing low from that candle on 4 o'clock on Tuesday the 9th. That would be for me the sort of line in the sand. So short in front of that, maybe potential to go long, but wait for a clear break of that 75 area. Natural gas still under pressure, not really doing an awful lot again. Looks like a bit of a topping formation, and we're down below probably a neckline on there, which is around 224, 225. So yeah, that's about it on the commodities.
Did you check copper, Steve?
No, call a copper. Oh, nice little breakdown. Nice. Let's look at the weekly chart first. We can see again this this reaction higher from 313, which is the 11th of July last year low, or weekly low, and then the move higher topped out at 435. We've found decent support around the 382 level, and we've cleared that. So it's the this is the lowest price we've been since the start of the year. So back to well, we stretched even further. We haven't seen this sort of price action since November last year, in fact. So really under pressure on that weekly chart. Let's take a look at the daily chart, and you can see we had this downward trending resistance level, which had multiple touch points, and probably would have redrawn to there, but still cleared through there. So it looked quite positive around about mid-April. But then we formed this evening doji star formation, and that seemed to put a top in, and the reaction higher from there has been pretty substantial. You can see sort of like if we look horizontally, we've got decent, let's make it a little bit more obvious, decent support where we previously had a swing high, so that would have been resistance. It's now turned into a bit of support, and we've just tested that this morning. That comes in at 370. Overall, we could expect this to there's an upward trending support line somewhere around this area here, 360, and again horizontal support all the way down at 355. So yeah, nice, clear and clean break from that support that was probably around, as I say, around about 381 to start with. So that would be the first resistance if we managed to retest that. But yeah, under a clear bit of pressure there. Don't know, is that strength in dollar, Joe, or is that there's probably more going on than that in copper?
Yeah.
Obviously to do with sort of like what's going on globally from an economic standpoint, and obviously copper is one of those commodities that is very important in all the technology sector.
Yes, indeed. Okay, well, let's take a look at FX then, because dollar had a very interesting move yesterday. We can see this major area of support here again between 100.82 to 101.30 continues to provide support, but we are still seeing resistance around 102.23. So yesterday we had a very, very strong day, a bullish outside candle or a bullish engulfing candle, really positive indeed. Minor correction today, but all in all, not an awful lot. So we still need to try and clear this level at 102.23. And if we do, then we've got this next level above at 102.83 to potentially target. So yeah, is the dollar rounding off a bit here, maybe trying to form some sort of short-term bottom? Maybe. It still needs to do a little bit more, but certainly yesterday would have done the dollar bulls no harm and given them a bit more encouragement to maybe try and push this higher. Looking at some of the other majors linked to the US dollar, we can see here that Euro US dollar continues to fail at 110.75. Yesterday we posted a bearish engulfing candle. We took out some previous swing lows in the short term in the process as well, and a 50% fib level. The uptrend, the bullish channel, is coming in pretty close by. It looks like one of our analysts has suggested that's where they'd like to buy it today. And I think that makes a lot of sense, given that this trend line's been in place for a fair amount of time, going back really to September last year. So a pullback into that level may offer some opportunities for the bulls in the short term to potentially push this higher in line with this bullish channel. If we take a look at cable or sterling US dollar, we can see here that prices failed to overcome this 126.66 level. This is why it's important all the way back here from May last year. It was a previous swing high. We've now retested that. We failed at that level. Yesterday we posted some pretty nasty selling really, pretty much sold off throughout the session, but some support has been arguably found at 125.25, which is these previous highs here. So we have to wait and see if that is going to provide a bit of a base for the pullback, and whether or not we will see another retest of these highs in the short term. Clearly, the overall trend remains bullish. We can see that that's been the case since the disastrous budget back here in September. Pretty much prices have been on a pretty decent uptrend since then. Okay, a number of yen currencies have been requested today. So I'm going to look at sterling yen, euro yen, CAD yen, and Swiss franc yen. So let's start off with euro yen and see what's happening there. So this broke out of this range above 148.40 back on the 28th of April. It was a really clean break to the upside. We then got a gap high the following session before then posting an engulfing candle, which triggered a corrective move lower. So from a technical standpoint, we would have expected 148.40 to hold as support, but prices have continued to drift lower and now hit this previous swing low from the 25th of April. And so far that's done the job. So yesterday we hit that level, but closed well above it. And today we are attempting to move higher, up by 0.35% as things stand. So is that potentially it for this pullback? It's been a bit deeper than we would have expected, but maybe this is about to start moving higher. I think what I'd like to see is probably the completion of some sort of consolidation pattern or a continuation pattern here. It looks to be maybe some sort of pennant or wedge formation that could be taking shape here. So ideally what I'd like to see is a close outside of this, at which point then we can maybe start thinking that higher prices will be seen. And for structuring your trade idea, ideally you want to have your stop loss below these recent lows. And in terms of the targets, you know, if we're looking from a technical perspective, maybe we could do a measurement from sort of the move, where the move began. So if it's a bullish flag, for instance, from the bottom of the pole to the point of the breakout, and this is suggestion because it hasn't happened yet, then maybe we could be looking at a continuation higher up towards kind of 160.70 over the medium term. Clearly, the underlying trend is very bullish. So therefore, we would expect that these sort of minor consolidation patterns would end up being opportunities to buy if we do get that close higher outside of or completion of this kind of break of a wedge. So positive, I think, for now, but speculative until we get the close above it. Let's take a look at sterling yen. So that's had a decent pullback into support between 167.61 to 167.97. Highlighted this yesterday as potentially being an area to buy, and we can see there was a decent reaction from that level. In the short term, however, we did see a break of this short-term uptrend, so that's a little bit of a concern. And therefore maybe we might see a retest of the underside of this broken trend line, which will come in today around 169.10. So if we can start getting above that, I mean, ideally we need to probably engulf all of yesterday's losses for me to really get behind the idea that this is going to continue moving higher. Obviously we had GDP out today, we had Bank of England out yesterday, so that's probably causing a bit of an issue here with this particular pair. Let's take a look at CAD yen. So that continues to rally into significant resistance. We're going all the way back here to June 2022. We can see here that we completed a large top and the breakdown through that support level, which occurred in December. We then got a consolidation / continuation pattern, and prices continue to drive lower. We've then formed support around 94.63, and prices have rallied pretty substantially in a short period of time, but only as far as these previous support now turned resistance levels. And then we posted a bearish outside candle, or bearish engulfing candle, on the 2nd of May, and prices have failed still to get back above these levels. So looking more on the bearish side for me, I'd prefer to be selling Canadian dollar and buying Japanese yen at the moment, given that this major resistance level continues to prevent prices from moving higher. If we take a look at Swiss franc versus the Japanese yen, this looks pretty good indeed. So this, as we can see, the long-term trend is pretty spectacular, to be honest. So, opportunities to buy dips is what we should be looking for here. We can see that the prices broke through this major level of resistance, which began around sort of September 2022. We broke through that level with a big move to the upside here on the 28th of April, and the pullback in recent sessions has been quite a nice one from a technical perspective, and found some support in and around this area that we'd previously highlighted, between 150.23 to 150.71. Again, are we forming some sort of continuation pattern here? Ideally, we'd like to see a breakout of this, and that would confirm that this is a continuation pattern and we can start expecting higher prices. So again, from a measured move perspective, we can take a measurement from the sort of beginning of the swing move higher. And if we do get the break of this continuation pattern, then that could indicate much higher prices over the medium term, towards kind of 165.55. So potentially some very good upside opportunities there. But I think we need further confirmation by seeing a break out of this pennant, flag, wedge, whatever you want to call it. So yeah, I think I'll leave it there on the currencies, unless there's any other requests. Don't think there is. No. Cool. Over to you, Steve, on the indices.
Thanks, mate. FTSE yesterday had a bit of a dip down, formed a doji in the end, so a bit of indecision here. At one point in the afternoon, obviously looking pretty bearish indeed, but a nice recovery across the board in indices yesterday afternoon, and looking mildly positive going into this morning. Support, obviously, we'll be looking at yesterday's low around about the 76.80 level. Resistance today should come in around about 78.15, and yeah. Otherwise, not really a lot to say there. DAX has been negative every day this week so far. We've seen even Thursday's price action yesterday, although we did have quite a major sell-off into the support area, just stalled quite a way in front of it. 15,700 we're looking at as support. This sold at 15,755 and then reacted higher in the afternoon, but still closed lower on the day. Price action this morning has tried to attempt to move higher, but just pulled back over the last hour. Similar sort of price action in EU 50, nice spike lower, but really sort of ended up closing positive on the day. So yeah, it's things look to be have we posted a higher low? Potentially, yes. So I'm not going to get too engrossed in being bearish or on the indices today. I don't think. I'll give it a little bit of room to breathe. Dow, similarly to the DAX, 4 negative days of price action today, has got off to a much better start, and after the reaction from the higher low posted at around about 33,118, we've seen a nice start of the morning, trading around 33,400. Nasdaq has continued higher. This is like bucked the trend. Obviously, the technology sector enjoying a little bit of me time at the moment. So we've broken above resistance around about that 13,300 level. That's the key level of support now. As long as we maintain levels above there, we've got potential to advance further forward. Although the momentum, I would say the momentum is stalling slightly. It's still positive over the last 3 days, but it's not running away with itself. The ranges have tightened up as we've pushed higher. So don't get too carried away with it. And a bit of a decision yesterday in the S&P left us with another doji candle. So really looking for some real direction in these indices. I think there's a lot of nervousness out there. A few more banks, regional banks failing in the US. Is it going to have a knock-on effect to the bigger banks? Wouldn't be surprised, but it's all about the timing of that trade idea. So yeah, apart from that, yeah, let's move on to our gun to head, because I want to talk about it, Joe, because I did okay. You had a winner yesterday?
Oh yeah, I mean, it's kind of well, it will go down as a winner, 5p.
5p. Yeah, I like that.
Yeah, anyway, gun to the head trade. So we both picked trade ideas. Just to recap what it is we do here, if anybody's new, we both picked trade ideas with stops and targets. We must have risk reward ratios of better than 2 to 1. Explain the reasoning behind that. Our win rates on these trade ideas is around 40%. So we need to make sure that our winners are far greater than our losers. Not the case with my trade yesterday. But the trade ideas are closed out at 9 p.m. UK time unless the stops or targets are hit before that. One of the main reasons here is that we want to keep costs low. Obviously, if you hold something overnight on a leverage basis, you are going to be charged for the privilege of doing that. We don't obviously have that issue because we close these ideas out overnight. We don't have any sleepless nights as a result of that because the trades are not open. We also risk 1% of trading capital on each trade that we do. So there's a maximum drawdown impact on our account per day of 2% if the worst happens and both trades are stopped out. Plenty of examples of that happening, but obviously we want to try and maximize our upside, and that's why we're always looking for pretty decent sized winners when we place these trades. So obviously one of the issues of closing the trades out at 9 p.m. is that sometimes trades don't move anywhere. That was the case yesterday with my idea. I was trading New Zealand dollar versus Canadian dollar, pretty much moved sideways throughout the entire session, and there was plenty of volatility around in other markets, but I just didn't seem to find it. We can just bring that trade up now and have a quick look. Signals underscore center for our profile. We post them up. This was my idea yesterday. Nice area of resistance, looking for a sell-off there, just chop sideways before eventually closing 5p on side. But as you can see this morning and overnight, had we held it overnight, it would have gone pretty close to the target. But no prizes for that, unfortunately. So Steve, go on, give us some commentary on your trade idea yesterday, because it was a good one.
Yeah, it's sort of like I was looking at the indices this week and really thought that I attempted to go short twice on the indices, one on EU50 at the start of the week, which failed, and S&P as well, which failed again. So yeah, didn't sort of have any success. It was, oh no, it was EUR. Hold on, get the right one, Stevie boy. EU50, and yeah, I was sort of like selling into it as it rallied, and there was this downtrend resistance line on the 4-hour chart. That was the one that was really sort of, I was clinging on to desperately, thinking, right, okay, we've got potential for, it was here actually, potential for it to, it was trading around here when I sold into it. So it was definitely on a positive path. So I was selling into the short-term positive trend. So contrarian trade. I love them sort of things. So I could keep my stop quite tight, and I didn't have to look very far to bag some profit. Even sort of like my profit level was, I think it was around about 42.91, which was way in front of the previous swing low. So I didn't have to expect a breakout to the downside to nail my profit, and it played out really nicely. After a few hours, actually got quite close to the stop. It felt, I think, straight away when we were talking live, it was already about like £8 or £9 offside, which is like nearly half an hour. And yeah, flirted with the stop and then projected lower for a few hours. But now look at it, it's bounced right back to that sort of level. And if anything, for me now, it looks a little bit more positive. It looks like it's angry that I took some money out of it yesterday. So maybe it's going to slap a few EU50 shorts in the face today. I'm not going to stand in the way. I've done that far too often. Get a bit carried away, get a bit confident, and try and do it again. But the 4-hour chart again hitting that downward trending resistance line, so worth another go, I suppose, but have a really tight stop in it. If it closes above that downward trending resistance line, and it'll be above the 4-hour Ichimoku cloud, I think there's room on the upside. That was it.
So you're not doing that?
No, I'm not. No, I was tempted, but I'll show you the how we did yesterday, and this is like proof that Joe made 5p.
Thanks.
So well done, Joe. No, he's just like it's a winner, winner,
It goes
chicken
down
dinner.
as a on the win rate category.
Yeah,
So
exactly.
yeah.
We're going to
So
sort of like, I'm sure
go on.
we're going to edge a bit higher than that 40% win rate that we normally have. So yeah, it's well, I don't think we will. I think we'll stick to 40%. I'll be happy with that, overall.
Yeah,
40%, as
absolutely.
long as our risk reward is, more than 2 to 1, then overall we've got a good chance with that.
Nice. So we started off with £2,000 of this account. It's currently at 2,065. So we're ahead. Let's hope we can put our foot on the accelerator a bit here, Steve, and get some
It's
nice
like
R banked.
it's like that topping formation on the charts, Joe. We keep getting up to this level, and then we sort of like get smacked back down again. So we need
Yeah.
to do something to break that trend. And I'm struggling to see where it's going to come from today.
All right. Well, let me go first then. If you're struggling, I'm going to look
Go in.
at sterling versus New Zealand dollar today. So looking at the daily chart, first of all, we can see here that prices rallied into a significant area of resistance. We had a previous swing high, and we also had a 61.8% fib level from the longer term price setup. And prices have been trading really neatly within a bullish channel, as we can see here, but we saw a breakdown on the 8th of May. And in recent, or just today, to be honest, over the last few hours, we've seen a pretty substantial rally to the upside, already up by 0.83%. Given the break of this channel, I think I'd prefer to fade it. And I was looking at the intraday setup here. We can see there's a bit of a corrective channel going on here, and prices have rallied into the upper end of that. The candle was looking a little bit nicer about 5 minutes ago when I first identified it, because there was a bit of a shooting star candle forming, but I still quite like the looks of this. So I'd like to have a go at selling it at current levels, which is around 20030. In terms of the stop loss, I'll go around there, 20100. And target and move down to these lows again, which is at 197.92, which is about 3.4 risk reward ratio on that today. You got all those levels, Steve? Do you need me to read them out again?
Was it 197.92 your target?
197.92 target, stop 2.0100.
Yeah, I think we're on with that, mate.
Okay, let's just confirm that on Steve's screen. Order placed. We can see that the stop and the target there are on the screen as well. Let's see how that goes.
Yeah, good luck with that, mate. I sort of like was struggling a little bit, and I was driving through the sort of like the looking for a little bit of FX. When in doubt, give that a shout, I suppose. But really, sort of like when I scan through, I look at all the different time frames. Like this on the weekly chart, the Euro CAD sort of like a real bearish outside candle last week, but it's stalled a little bit this week. New Zealand dollar, yen, Swiss yen. We seem to have a nice little positive reaction in a lot of these. Not so much New Zealand dollar CAD. Okay, I'm struggling. So what I might do is I might go for gold. Price action in gold, I like it because the 4-hour candle and the 1-hour candle are below the cloud. We've had a couple of negative days of price action. We had last week's shooting star type candle as well, and we're threatening to close lower on the week this week. So let me just bring this up. I think there's plenty of room to the downside. That 2000 level isn't far away, and if we do clear that, then I imagine we'd extend quite rapidly lower to around about the 1990 level. So it's one of those things, sort of having a tight stop in here. I should go a little bit more aggressively. Let's see. Now, if it breaks, yeah, if it breaks, we'll if it breaks that 2000 level, we should have a bit more of an aggressive move. This is really based on maybe a positive dollar move today. So yeah, I'm happy with that one. I'm going to go short of it. what can I get on? Probably not a lot. You know what it's like with this. Oh. Risking, can't risk 1%, Joe. Maybe if I bring my stop in. Oh, that's a bit better. Risking 1% there. And I want to target. Can I get it on? I think I've got it on, Joe. Yeah, risking 1%, about $20. Looking for 58 on the downside. Really looking for it to break back down, but buying it in front of that 1980 level. So that's my trade idea for the day. A little bit desperate, looking for something. I think although the sort of like the spike lower that we had just in the recent couple of hours down to 2005, we've reacted a bit higher from there. But I think we're going to have an attempt at that $2,000 level. Hopefully we do it before we get back up to that 2017 where my stop is. So that's it.
Okay. We've had a question there about the trades that we do and whether or not we incorporate a lot of fundamental analysis. The answer to that is we don't incorporate any fundamental analysis, I would say. Only really what we've just read out in terms of the latest headlines, and that kind of forming a bit of a bias for us based on obviously years of experience of understanding, financial commentary. But primarily, Steve and I are technical analysts, and we prefer to prioritize price action above all else. So we will focus on chart patterns, candlestick formations, that kind of thing to form our opinion on these trade ideas. And, we don't spend a lot of time coming up with these ideas. That's the idea of the gun to the head challenge. If we had a gun to your head, what would you trade right now? So that's why we come up with these ideas, and just to try and showcase, the pitfalls and the challenges that we all face when trading, especially with kind of small accounts. So hopefully that clears that up for you.
Yeah, I mean, with fundamental analysis, it's like that sort of fundamental analysis takes place on a more of an irregular basis. A lot of the time, markets are trading technically, really, especially when you're looking at intraday trade ideas. You sort of like, it's very rarely you'll get a news story on an asset every single day. I know we can sort of like with currencies, there'll always be some sort of like talk about levels, but you don't get an interest rate move every day. You don't get like huge GDP figures coming out. Like real fundamental stuff doesn't really impact. So a lot of the time we're looking at the technicals to sort of like try and capture some alpha while we're waiting for the next fundamental story, I suppose. That's the key. We are working on a few exciting things, a few projects trying to combine a lot of analysis. So fundamentals will form part of that because it is a key part. But there's other types of analysis, news sentiment analysis, obviously, and quantitative analysis. So we do look at other things, but like for the purposes of this show, it's just sling the gun out your holster, have a lot of shot, and see if it sticks.
Yeah, absolutely. Okay, so day ahead, just the one item on the calendar today of high impact, which is the University of Michigan Consumer Confidence. That's out at 3 o'clock UK time. And then next week, we're looking forward to a bit more data. So we've got US New York Empire Manufacturing, UK Labour Market Report, US Retail Sales, and a speech from Fed Chair Jerome Powell. So we'll leave it there. Hope everybody's had a fantastic week and a successful one with your trading. We will be back on Monday, and until then, everybody, enjoy the rest of your day.
Cheers all.
Bye-bye.